Here we go, MMTs. It's a Saturday morning. It's 8:27 a.m. Pacific Standard Time, 10/22/2011. After doing the S&P 500 training, we have moved over here to the weekly Dow chart to present both the bull case and once again the bear case. So both have various different cases to them. One of the things that we're going to do is we're going to take this top diagonal trend line and we're going to bring it right over here where this is where the second part of this was our first correction. It was about 7 weeks long. And for educational groups, hedge fund managers, institutional managers, mom and pop people, look, go back, type in Dow Jones in the search box and stockmarketfunding.com. We were up here at 12,800 on the open with a high of 12,876. Prior to this point, we said there was going to be a massive correction coming around the corner before you got down here on the lows of the Dow. Now, one of the things that we do care about, people, is to understand that markets have short interest on the Dow, and that the bigger that the short interest, and short interest means that people who were heavily shorting the Dow have to buy to cover. That's how you get these 52-week calendar year lows. And you had a massive rally on this last week bar. The bull case for the bull is that the 10-week has crossed over here, and the SMF qualifier always remains that this 10-week moving average, the blue line, once you start closing 4 weeks below it, you're in a bear trend. Now, that's for the bear case. Now, for the bull case is it stopped going down, and it's flattened out, and you have 2 weeks of a qualifier back above the blue line, and you took out and got back above the 100-week. However, the bull must be aware that any of these short-term mechanical rallies with short interest on them, as they buy to cover, that's how you get these big moves. Because as the bear gets down to the bottom, the bear stays too long, the bull stayed too long up here, and we got down here to our price target, which was 10,500. That was back when you had the Lehman Brothers collapse. Now, Bernanke did not do anybody any favor back in the calendar year of 2011 with QE2, with the new one called the Twister, which is, to me, a QE3. Now, what did it do is that it printed high inflationary food prices, gasoline prices, and it choked off the growth and the stimuluses that were working. What ended up happening is that when you artificially manipulate the system, things happen to the consumer. And as we had said, so for the educational people around the world that have different groups and whatnot, you clearly can see that we told you we're going to go miserably lower. And that 8,600 economists were wrong about the growth aspects of 3.5% to 4%. And part of that growth, you can thank the Federal Reserve for manipulating the system. They're to govern your system in the capital world around the world in a certain way. What I am going to do is blow up. I'm going to show over here where this low trend line comes right all the way diagonally right through here, and it's come right to the point of right here to the high. Now, for the bull, we are approaching the 50-week moving average. That's the wall of resistance. We had a big rally yesterday, 267 points on the Dow Jones right here. And why was that? Because Merkel and Sarkozy were supposed to have a deadline meeting by Sunday. They decided to put it off until Wednesday, and they got to bail out the grease. But here, let me tell you something. What's going to end up happening is that traditionally stock markets rally in November and December, okay? And that October is when you do put in lows for those rallies, and we did. And it was early in the month. And we have rallied 3 weeks up, and our concern is for the innocent people out here is that you're not sucked into this stuff. This is called a wedge pattern right here. And what goes just like we went straight down and straight up, the problem with this move is people start buying up at the top. Most of the bulls stayed out of the market. You're above the 200 week. You're above that 100. So there's a bull case here in the short term for support levels and whatnot. Now, traditionally, you have to understand how not to be pulled into the market after the low of the rally was here on the weekly level, which was set on the weekly level of 10.2. The low was 10,404, and now we're back up here to 11,812. We would like to very clearly let the bulls and the bears both know. So the bears stayed too long. The bull stayed too long too and wrote it down. And then the bear that was very, very, very bearish doesn't know when to come out. They had great gains on the correction. The correction now from this low to this high has been 1,407 points that we have rallied. And we have rallied strong and hard from that bottom in short cover rally. That meant that all the shorts, as it starts going up, they have to buy to cover. So for the bulls, you've got something going on here, and you've got the 20-week crossover, the 50. That's still a bearish case in this respect. The thing that we'll be looking forward is that how many people are going to chase the rally after 1,400 points. Because what ends up happening is the majority of the crowd is never in here. We were. They never know the mechanical part of Wall Street. And what are those mechanical features and price mechanics of Wall Street, using the futures to buy to cover? So as the bear is being squeezed out, the bull is also moving in. The systemic risk and the problems that we face in America and around the world haven't changed. That's why you've got to be able to know the differences of what's really happening. The earnings cycle that we're currently in right now is that the earnings haven't totally collapsed, and they're not really that great. And CEOs, well, they're being much more conservative, and you can't blame them. We already knew that they would. What we would like to point out that as we approach this area right here, that's going to be that next level. So if we clear the 50-week moving average, this is the neckline of that collapse to the all-time 52-week bear low. And that's from this point to that point, right there. And from the amount of points that we went straight down and mathematically straight down and mathematically straight up is how do you make sense out of it without being taken to the woodshed? And why do people have such a bad feeling about things? It's because you've got to understand that the exchange model is out to hurt you. They're not out to make things good for you. But most importantly is that when we were over here last year in 2010 making the great rally, that's where Bernanke came in, and we made the high. Now, going into stockmarketfunding.com, we were telling everybody back over here in April, at the end of April, there was going to be a huge, huge correction coming. And that all of the economists had 4% year-end growth, 3.5%, but it ended up down toward the SMF analysis with that GDP at about 1% in the short term, because all 8,600 economists were wrong. Now, we're always working for you because we care about people who invest money, whether you're the littlest investor or even the biggest investor. Our compassion is always with you. And the thing about it is, we want you to understand that we don't want you getting sucked in. There is a bull case here. Traditionally, November and December is where you see these big rallies. Now, that much of the rally so far has gone back. It's already happened. What happens is, historically, people have mindsets on historical data. Well, hey, let me buy that big bull rally at the end of the year. Well, 1,400 points of the Dow rally's already gone by. Please don't get sucked in. And that the bear case and the bear economic case still is intact. That's okay. So what? The bull ride has been from the bottom back up to resistance. This was the major calendar year bottom right here. And we went through it. And the reason why I drew those long-term diagonal trend lines is you can see where we kept selling into it. This was 1 week, 2 weeks, 3 weeks, 4 weeks, 5, 6, 7, 8, to the 9th week of the bottom of that bear where we flushed them out. Then the short interest, which had mounted, everyone's selling short. And as that short interest got higher, mathematically higher, that meant that they had to buy it back to get paid. And that's how you get these 1,400 point movements up. Just like you got 1,400 points from that breakdown point right here to that bottom. That's a 2,800 point round trip within the calendar 2011 yearly bear bottom. Now, the bull has definitely come back, and there is a little bull case here. You've got 2 weeks above the 4-week moving average. However, you need 4. If you do not have 4, and the 10-week must come up behind it. Now, having said all of that, because of the broader Wall Street tape has been taken to the woodshed, fund managers have underperformed. They were all wrong. We brought it to you live because we care about you. We're not here to sell you nothing, but just to kind of give you a guideline if you're an innocent individual or whatever kind of educational group or college that if you're looking at it, we get lots of people who come to us. They watch our stuff for one reason, because they find out, why is ours so much different than all of the textbook stuff and all the other beliefs that people have? And why can I make a lot of money when it goes this way? But most importantly is, how do I get in the bottom knowing that it's going to go up? But most importantly is, what are the price controls that are used in the exchange model? In the futures model, buy to cover, stock futures, all kinds of various different kinds of instruments are a big player in the upside for the bull and the downside for the bear. We're always 100% neutral. But what we are telling people is what's going on around the world, that they're not going to get out of it. And that 2012 has a lot of repercussions to what you see happening here, trying to close out the calendar year of 211. As we go into the traditionally the most strongest periods of the market of the year are this time of the year. The Halloween, happy Halloween, Thanksgiving, and of course your Santa Claus rally. But let us not forget that Santa Claus was already here. Santa Claus was already delivering the packages where everyone got sold out. All the margin debt got taken down. We got lots of things going on. The economic forward-looking inflationary adjustments for 2012 have yet to hit this market, because Europe is going to print so much money over the next 180 days that once you start calendar year and end out 2011, is how do I know when to sell into these things and get out of the way? And that it takes about 4 to 6 months before we start seeing another big round of high food inflation and gasoline and lots of other things that will play into 2012. But what will be the timestamp? Now, the earnings haven't totally collapsed. They never do, but they haven't taken the estimates down enough to meet my forecast for 2012, meaning that analysts better get busy, and they better be listening if they do happen to come and watch our live videos. I'm telling you, Mr. Analyst, you better start taking your estimates down and start working your gimmicks and your tricks that way, because we are still at the higher end of the bar of the previous 27-month cycle of the earnings. And we are just right now in the heart of it. The Dow earnings, hey, they haven't been great, but they haven't been real bad either. And it's always where the turning cycles come into play. And the thing about it is, the wall of resistance is right here. We'll be watching where this top end of resistance of this neckline right here, I'm going to diagonal trend line for you. I'm going to put it right here, because this is where the havoc started. And once it broke through this trend line right here, that's the upper end of the resistance on the Dow. Now, just remember, do not get sucked in. You've already let 1,400-point rally go by. And then, once again, the Dow already had a 267 Friday rally yesterday. That was the majority of the weekly move right here. It was all in one day. Now, look, standard technical analysis is one thing. That's what it reads. Of course, we don't make our decisions on that, but it is a bull case nonetheless versus what the bear case was. And when you broke below them, that's how you got to these lows. The 200-week, you're above it. And the bear case is that the 20-week is still crossed over the 50-week. It, too, will have to flatten out. This blue line right here, the 10-week, will have to go up in value. And you have to have 2 more weeks closing above it at 11.2. That's where it is. If you can get that, then that will be a bull case for the end of the year. But the bull case is a very short-term process where Once Wall Street's buy back all their short interest, uses the futures market and does all that thing back up to resistance, what is going to be a primary catalyst? Well, I can tell you got a support here at 11,200 for the bull. So if you are a full-time bull, that's your support level. For the bear, though, you stayed too long. And if you weren't watching our live videos, we told everyone how this rally would happen below 10,500 was where Lehman Brothers had collapsed back then. So basically, be aware because as we go through this next week and the week after that, most of the earnings are going to be out of the way, and there's going to have to be a much stronger fundamental case, an economic case, to keep this bull rally going. Yes, people argue in a textbook fashion that forward-looking 12 times earnings, 11 times earnings is cheap with stocks and all of that. Well, yeah, we haven't seen that since 1957. That was one of those times that you could have really bought. Well, that was a major bull rally back then, but let me tell you something. Because of what the Federal Reserve is doing, it's got consequences in 2012. And we have all the live analysis to prove that stockmarketfunding.com was correct. And we said a huge correction was coming over here. And we've also updated the calendar bear 2011 process lows and how you get these big moves. You had big moves down. You had some great moves up here to here, from here to here, and Dow points down and back up. Beware, stay tuned. Do not get sucked into buying the top before the reversal comes. Be cautiously careful that most of the rally has already taken place, 1,400 Dow points. So the upside from here to going back up to resistance is limited. Once again, we will be shorting January.